Hey guys, how you doing? I am DC Constant, your host for the Successful Wives Network, where we are elevating wives globally through professional and personal development. And today is Finance Friday, yes, where we help you guys save money and keep it in your pocket. Okay, so today we have back our financial consultant, Rose Luke. Hey, Rose.
Hi, everyone.
Hey, so today, guys, we are talking about the difference between good debt and bad debt. Like, what's the difference, right? Because it's more than just the amount of money that you owe. And so some of you are probably like, I never heard of good debt. What's good debt, right? Debt isn't debt like I owe, right? So we're going to talk about that today and how you can leverage your good debt. All right. So let's just dive right in. So, Rose, can you tell us first? Let's just explore the concept of debt.
Yes. Simply put, debt is really just borrowed money, right? So
Mhm.
if you borrow $20 from a friend, you're indebted to them. It's just simply borrowing money and then having to pay it back. So really, debt for a lot of people, really you borrow a large sum of money. Not everyone has $300,000 to put down on a home, right? In
Right.
cash, maybe some fortunate few. But for the common American, you don't have that. So you have to go and be indebted to a bank or a dealership for that large purchase for them
Mhm.
to lend you that large sum of money. And so now you are indebted to them because you borrowed this sum from them. So that's pretty much what
Mhm.
debt is.
Okay, so is debt good or bad?
For me, I like to say it's both. Um, the difference between good and bad debt pretty much is just mentality, your mindset about money, your spending habits, and how trustworthy you are, and how much you borrow and you're able to afford. You have to be honest with yourself. So it's really accountability as well.
So can you give us some examples?
Of course. Well, an example of good debt really is anything that you deem is worthy of an investment. So a lot of people will feel a home is a good investment. Um, that borrowed money you take in order to purchase a home and receive a mortgage, which is a mortgage loan,
Mhm.
that is considered a good investment because once you buy a home and you start making those payments on your mortgage, now you're putting equity into that loan. Anytime you, let's say, upgrade your kitchen or paying on those property taxes, you are putting equitable money back into that loan. So when you do sell that home, you are now gaining more money than what you borrowed. And if you've been making on time payments on that mortgage loan, you are considered a great investment. So that is an example of good debt.
Okay, so we got home, any other type of thing. So what about my vehicle? What about my student loans? What about my iPhone?
Yes. Well, let's go in that order, right? So your vehicle, that is both good and bad. Honestly, you have to pay attention to what you can afford again. So if you go and purchase a vehicle that is within your price range, that is affordable, meaning you're able to afford twice the amount of your monthly car note a month comfortably, that car is a good investment because you use it to get around from point A to point B from work, taking the kids to school and everything like that. It's a good investment. Now, where the car will become a bad investment is if you are admiring a car outside of your means. So if you are an individual that works, let's say 40,000 a year, but you get the type of vehicle that is about the same price as a home, right? Like a Bugatti or a Maserati, that is not conductive or conducive to your lifestyle. that is bad debt. That means you're spending outside your means and that you cannot comfortably afford it. A lot of people feel they can afford a car because they can afford the monthly car note, but so much more goes into owning
Mhm.
a vehicle. There's maintenance, um, car, oil changes,
Mhm.
maintenance, accident, insurance, gas,
Yes,
you know,
insurance.
all of
Yeah.
those things, tires. A lot of people don't
Oh,
factor tires into owning a car and knowing when and how often to change your tires. That's a good tip. Your tires are seasonal, so you always want to change it twice a year in the hot months and the cold months. But that's why I say cars can be a good and bad investment. It goes back down to the accountability and your spending habits. Student loans, a lot of us feel that that is bad debt, but in
mhm,
actuality,
mhm,
when it comes to your credit score and payment history and the type of loans, student loans are considered installment loans. So if you have comfortably been making your payments since you got those student loans, that is considered good debt because now really you've been in school for 4+ years, and that is a really long time to hold on to a loan. So
mhm.
really you have to be paying those on time, and you can early while you're still in school, which I advise a lot of people to do.
Yeah.
You set up a payment plan to do that. So you're on top of it and you're not ignoring it for the 4+ years like I did. And your interest rate keeps piling and principal
Mhm.
balance keeps rising. And that is why a lot of us Americans are indebted to student loans because essentially we were not taught financial literacy. We just signed that promissory note and let it
Yeah.
go.
Yeah.
Um, so student loans could be good. You just have to get a handle on repayments and working with a lot of the government programs that are out there to help you manage those.
Can it also be good for taxes? Um, in terms of, because I know I've gotten, paying on your student loans, you get like a letter from the IRS saying how much you've, paid for the year, and can you claim that, or what portion can you claim on your taxes?
You can. To my understanding, I'm not a tax professional, but
Okay.
in my own personal experience, when I have been making payments on my student loans, those payments are written off and you're able to claim those on your taxes, and that does help lower your adjusted gross income just a bit.
Okay.
If your student loan has been forgiven, that's added on to your adjusted gross income as extra income that you've earned throughout the year, and that can kind of put you in a position where you have to pay back taxes, where you owe taxes. So really it is it can go either way, but
Okay.
from my understanding that it could help either way.
Okay. Every little bit helps.
Yes.
And so now we're not our iPhones. Now, some people may feel like that's a debt, or could that be an asset depending on if you're using it for business?
Mhm.
Could it be good? Could it be good debt?
Yes. Again, good debt is equals an investment, bad debt equals being indebted over your head. So cell phones to me are, I consider, somewhat bad debt.
Ah,
I feel a lot of us kind of switch out models for cell phones every couple of months. And these cell phone models cost
ooh,
$1,000 or more on top of what they already charge you in fees. And every month we make payments. And also, you don't realize you're paying that phone off in installments as well. So that's
yeah.
another installment loan that people are not necessarily thinking in regards to it affecting their credit. But mind you, if you miss a payment and you switch carriers, that unfinished balance that you're still paying on that installment loan on that phone is going to go to collections.
Mm,
And when people check their credit report and they see T-Mobile, why do I have T-Mobile on my credit report? Well, you switched irresponsibly. You still owe them for that $1,000
mhm.
iPhone. and now you are indebted to T-Mobile for a phone that you borrowed from them, you know.
Yeah.
So for me, business wise, it's great, because again, it's an investment, but you also have to be accountable on how well your business is doing in order to stay on top of paying for those lines.
Yeah. And I just want to say a sidebar since we're on the whole phones, whether it's an iPhone, Android, or whatever, because they all are expensive.
Right.
I always plug, if you have an iPhone, you have an Android or any type of phone, you should also have life insurance. I am not a life insurance agent.
Neither am I.
I'm a member, I'm not the president, but I just feel so strongly about that.
Yes.
Especially in certain demographics, different regions of the country. Collectively, a lot of folks don't have life insurance. And I'm like, well, if you have an iPhone, $1,000 iPhone, you can afford insurance. I just feel so wholeheartedly passionate about that. But again, I don't work for any insurance agency or anything. I should, right? But I just feel that strongly about it because insurance is, to me, is a good investment, because it's a good investment. So I just had to put that plug in there because I feel so
And
passionate about it.
I'll add on to that plug. I'll add a little slack to that cord. For me, if you if you have investments that you can include into a living will and trust, those
Mm,
are investments.
yes.
How would you feel if a loved one of yours passed away and they left you their cell phone?
And a cell phone to pay off?
Yeah, like
Oh,
for
people would be
me,
pissed.
yeah, people will be
They're-
pissed. Like, what am I going to do with a cell phone? That ain't my number, right?
Right.
But people leave homes, people leave cars, people leave land. If
Mhm.
those are the things that you want to include in your trust, in your living will, those
Oh,
are good investments in order for you to stay on top of. And in order for you to leave things to your family members, you need life insurance because
yep,
that is where the funds are going to come from when people
yep,
say, oh, they left me something in their will. They're not going to go to your bank account because that is not theirs. Um,
exactly.
get yourself get yourself educated about finances and just the way the wealthy really set themselves up in order to provide generationally for their families, um, after they're gone. So
Yeah.
for them, they get rid of their bad debt, right? They lower their
Mhm.
liabilities and they increase their assets, which is good debt. Like I said before, it's all about mentality. So once you change your mentality when it comes to money, you will start to see what exactly is benefiting you and what is holding you back.
Yes, absolutely. Because once I got educated on it, my husband and I, we went to an estate planner. So we have all of that, taken care of. Something happens to us, or even if we got sick, you don't necessarily have to die, but have it set up where we won't be out in the street, homeless.
Exactly.
Or, when my husband and I do leave here, our daughter is set. She's set, she's taken care of. There's no GoFundMe. There's no selling dinners or anything like that. Like, it is our responsibility to make sure that when we leave here, that she's taken care of, that we're taken care of, even in, death, do you want to be cremated? Do you want to burial? Like, people don't like talking about that, but it's too late to talk about it when you're dead. You know what I
Oh,
mean? So with that, I don't want to leave her with any uh bad debt, because that's debt too. Death is debt if you don't plan for it.
right.
And that's debt too. I know people that are still paying for funerals and their loved ones died like 5 years ago, but they're still paying for it, and they can't afford a headstone. So it's like, these are things that we have to talk about. So I didn't even think about that when I was thinking about debt, but
Yeah,
death is debt if you don't prepare for it. If you don't prepare
exactly.
for it.
Exactly.
Um, so
And
let's talk. Uh-huh.
oh no, I was just going to be a bit transparent myself.
Oh, go ahead.
When my mother passed away, at the age of 64, She was still working, unfortunately. And I was still trying to get on my feet. And I was like, I don't want my mom to work. And she was working at Jack in the Box. And she worked for that establishment for 30 plus years. Now, when you work for a company for so long, you start paying into a pension. When she passed away, I said, okay, well, let me go ahead and call their corporate office, and let me inform them that this has happened. And they said, unfortunately, according to their policies, they do not give the pension away to employees whose children are 17 years and older.
What?
And I thought to myself, then why would you hire senior citizens who have given their lives basically to your establishments? And this is part of your policy. Do they know that? And they said, not all of them do. And I said, that's very unfortunate. So as a family, as a community, we did have to go the route of collecting funds in order to pay for her funeral. And it was right then and there that I said, not me. It's stopping right here. I'm not ever going to put my children and my family through that. I have to set myself up. And so when I came across my company and they had a living will and trust, and it was just as simple as the process it was to go through, I said, I'm doing it because I want to get rid of my bad debt. I want to leave something. I want to increase my net worth. And this is a great way to help me plan to do that.
That is, wow. 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 That is, and of course that's put in there, think about it, by design, because as a company, they don't want to pay out that money. They don't want to do that. But that's also why we need to read. Also, like when we go into these companies, it is so great to understand what the policies are, because your mom didn't think that. I'm sure she didn't think that when she was signing, papers and stuff like that. She didn't think that at all. And
No, she
leaving,
was a
as a
single mother, just
beneficiary.
working. Yeah, she's just
Yeah,
trying to put food on the table. So for
yeah,
her, it was like,
absolutely.
as long as I'm working, I'm okay and I'm fine. And if I have
Yeah,
insurance somewhat, then me and my daughter are okay. But she
yeah,
never thought that she would unexpectedly pass away. And
yep.
unfortunately, it was left up to a 26-year-old me to figure things out. And lo and behold, she had a lot of insurance, but it lapsed. Now, when you get
Um,
insurance, make sure you're in a position to pay on it monthly,
yeah,
because it's just like any other financial thing that you sign up for. And just like paying your phone bill, pay your life insurance before you pay your cell phone bill. Because
yes,
I guarantee
yes.
you, anyone that's on the other end of that phone call is not going to fork up thousands of dollars to help you when you're in a bad situation. So
Mm-mm. No, they're not. And I'm sorry about your mom, and thank you for the transparency. And hopefully, that helps. That definitely, for those that are watching and listening, like, whoa, let me go update my policy or see what's going on. And even with jobs, because jobs offer different things. I think sometimes some jobs offer like that $10,000 or $5,000 basic life insurance
yeah,
beneficiary. Let's make sure we read the fine
fine print.
on print on that, because that happened with my husband's father when he passed away. So he had insurance that he left to his children, but he had one job that resonated with me. He worked there, but they were like, "Whoa, no." They were like, no. So it is just that all of that is important, because like even with my mom, I'm like, Mom, I mean, I could go before you. We never know when our time is, but where's your insurance? Like, where's your stuff? What do you want to happen, if you leave this earth before me, And her big thing is she do not want to be cremated. She was like, do not cremate me. She's from the old school too. She's 70. She's like, don't cremate
Don't
me.
do
Like,
that.
okay, well, where's your insurance policy? So we know we have enough. Okay, Mom? So, because she doesn't like talking about that. And I'm like, Mom, we have to talk about that. So we won't be in bad debt. Okay. So, but no, thank you for sharing that. One other debt I'm thinking about is the credit card. So can credit cards, again, can that be good or bad debt in terms of business? You know, I have a business credit card and I got a personal credit card. Is either one good or bad? Are they both bad?
Just a moment.
Okay.
Okay. All right. So you're asking me about credit cards and if that can be good or
Yeah.
bad
So I
debt?
have a personal one, I have a business one. Is one good or bad? Is the business one good because it's the business one, or it doesn't matter? What say you?
Well, when you talk about business credit, really, it's essentially how your business is doing and how you're handling your business. Um, Credit is credit,
Okay.
whether you borrow it and pay it back on time is what's going to be your deciding factor. Now, um, personal credit, again, you have to stay on top of your monthly payments, but also you have to be wary of maxing out your credit cards
Oh,
because that can lower your credit score from 50 to 100 points. You always want to go according to the golden rule of utilization, no more than 30%. Ideally, it's going to be between 5 to 10%. All of these financial institutions just want to know how trustworthy you are with the funds that they borrow you. That's why they always start you off at low amounts, 200, 300,
300.
just to see, can you manage $30 a month and not full blown desperate for funds that you
Mhm.
cannot manage on your own, you know. So for me, I always say it's good to have 4 to 6 credit cards within your wallet and
Four
a
to
company.
six.
4 to 6.
I only got two. That having credit cards in my 20s during my college years when they were just giving it out like candy.
Oh yeah,
Woo, then
that
it
was a lot to manage. Yeah,
so I'm
but
like, I want two.
I always say leverage credit cards because banks right now, they use your money to lend to other people, right?
Yeah,
So whenever
right.
you think your money is safe in a bank account, it is not, it is there at surface value. So whenever you get a credit card, using 4 to 6 credit cards and maintaining those and having them see you as trustworthy, they're going to increase those limits. So if you are setting your, let's say, cell phone bill to one credit card and you just pay that off once you get paid, that's your utilization. If you use another credit card for paying your light bill or your utilities, that's the utilization on that credit card. So therefore, you're not having a constant rotation in your bank account, but you're having a constant rotation on these credit cards and you're utilizing them and you're also feeding into your credit score and maintaining it and making sure it's healthy. Now, where a lot of people go wrong when using credit cards is they use it on unnecessary things. um, I hate to say, like, extravagant gifts for other people or themselves, um, poorly timed vacations,
Yes.
right?
Mhm.
Um, Everything has to be planned. So really for me, I feel if you have 4 to 6 credit cards and you use those towards your bills, you can now really budget wisely towards paying off those credit cards that are paying off your bills.
Okay. Okay. Ooh, that's okay. 4 to 6 credit cards. Okay. I'm gonna keep my two. I don't want to tempt myself. I'm doing good with my two.
There you
Maybe as you said, I'm doing very good with my two. Maybe I'll do three, but I'm maintaining the two.
Go ahead and maintain
Yeah.
those. And if you feel you're good, get another
Yeah.
one and just have
And
that as your gas card. I've started using that. One's my gas card. One
okay.
is my own personal maintenance card, right? Hair, nails,
Okay.
makeup, because that's an investment in
Okay.
yourself, right?
Yes, true. True. True.
And another one goes towards my subscriptions, Netflix,
Okay.
Spotify, all of my good,
The entertainment.
Audible, yes, my
Okay.
Audible
Those.
subscription that comes off of a credit card. So I just know whenever we get paid, I'm like, okay, I have to pay this off. I have to pay that off. And now I can prioritize my credit cards. If I'm not able to meet one at that, on that month, at least know my bills are being paid, but I might just have to skip getting my nails done or getting a new wig or a new pair of glasses, uh,
Okay.
it helps me stay on top of my budget and my accountability.
So, so let me ask you this. So with by me having, so I have two credit cards, right? But I
Mhm.
have one credit card that I have a credit of 5 grand on it. Okay. And then I have another credit card that has 3 grand. So for me, that's enough for me to manage. So that's why I'm like, I don't want to get another two credit cards with a balance, maybe $1,000 or $600 on it. I'm like, because I'm maintaining these two credit cards. So does that matter? Would you still encourage somebody to get another credit card? It doesn't matter what the credit.
I would say whatever fits your lifestyle at the moment. So
Okay.
if you are
Okay.
able to manage these two cards that have high limits, then
Yeah.
that is the most you should do. Because
Yeah.
if you start extending yourself and getting other lower limit cards, then you're going to take away from the ones you're already maintaining.
Right.
And then
That's
you're going to start drowning in credit card debt, right?
right. Right.
Owing more than what you should.
More than exactly. And that's why I said I'm just going to keep that. And I wanted to just elaborate
Oh,
more
yeah.
on why I don't need 46. I don't need 46. So like I got two with high limit and I manage them very well. So I
Continue
don't
to
want a
manage
600.
those, and
Yeah.
eventually they'll become those black cards with no limit. And that's
That's
essentially
that's my
everyone,
goal. That's my
that's
goal.
everyone's
That's
goal,
my
right?
goal.
Like, let me give you this glass,
That's
no limit card and swipe that because I know they know that I'm good for it.
yeah, yeah. That right. That's my goal that I'm working towards. So I'm like, because I'm always because I pay on time, I get other offers from those companies that's like, hey, $600, $700. I'm like, no. And it's tempting. Oh, it's very tempting. It's tempting to be like, oh, I got pre-approved for $600. Shoot, okay, I'll just use that for. And it's just like, no, because you have to pay that back. And
Yeah.
that's how I got in trouble in my 20s. So I'm way past that stage in my life and way more responsible as we should be, when you get older and you come out of debt like that, from the mistakes you made in your 20s. So I'm like, nah, I'm just gonna keep these two high limit cards. So I can, my goal is to get unlimited, get that black card.
Oh yeah. Oh
So
yeah, definitely.
yeah.
For me, I also like to share some warning signs that because not a lot of people know when they're transitioning from good debt to bad debt. Um,
Okay.
a couple of red flags to look out for is if you feel really stretched. Um, if your budget feels really stretched to make those monthly payments, that is an indication that you are leaning towards bad debt. You're not able to afford to pay those monthly bills on time, that's going to be a really if you're robbing Peter to pay Paul, which is a nice euphemism I've always heard, and it makes complete sense. If you have to kind of borrow from one bill in order to pay another one, you're being stretched too far.
Yeah.
um, Another late flag is if you're late on payments or you have to skip payments in order to adjust your budget to meet everything else, like groceries, gas, um,
Mhm.
everything like that. It's a red flag. If you're getting calls from collectors, that this is a big one. If you're getting those, hi, is this Rose? Hi, is this Amy? Um,
Yeah, they try to be your friend now.
No, they're not. They're not saying hi to see if you're having a good day. They want to say hi
Right.
to ruin your day,
Right.
and ask for their money. But that's another red flag to where you're like, okay, I'm not being up to debt. My good debt has gone bad, right? Another one is if you're feeling really overwhelmed with all of your bad debt. If you're ashamed of looking at your credit report because you know, yeah, I owe a lot of people money, it's nothing to be ashamed of, but it is a red flag and it is a warning to say, hey, you need to address this before it gets even worse. So that is all things that is fixable. I always say, do not be ashamed of that because a lot of us make mistakes. It's human nature
Yes.
to make mistakes.
Yes.
So for me, there's always a fix with our company. There's always a great way. We have a service that's called the debt payoff system that helps you do essentially the snowball effect, where you make extra payments towards one debt, pay that down, apply that same amount you were paying for that first debt onto the second debt until you pay that down, and so on and so forth. So it gives you a plan right down to the cents. So you're not
Mhm.
guesstimating, you're not guessing what you have to pay.
But yeah.
You have that plan. We also have another one that helps you with credit card debt, that helps you pay that down, and shows you how many points will be attached to your credit score as you're paying down those credit cards. So that's another one of my favorites. But don't worry, because if you have the courage to face it, you'll have the courage to fix it, and that unhealthy debt will eventually turn good.
Yeah, that's good. That's good. Okay. I this was good. Nice, good tidbits. Guys, I hope you were taking notes. Save the video, download the video, share the video, because this is really, really good. So I just want to thank you, Rose. We want to thank our special guest today.
Thank you.
And let's make sure that we're moving towards good debt.
Yes, yes.
Good that we can leverage in
And
our
you can leave
future.
behind. Exactly.
Yeah, yeah. That we can leave behind and leave that legacy behind, because that's the goal as well, right? We want to leave some good stuff and we don't want to leave bad debt. So thank you. Thank you for joining us today. Again, I'm your host, DC Constant, with the Successful Wives Network, where we are elevating wives globally through professional and personal development. Don't forget to follow us on all platforms at the Successful Wives Network. Thank you. Until the next time. Bye-bye. Be blessed.